Charles Evans, President of the Federal Reserve Board of Chicago, was attending and speaking at the plenary session, the first plenary session of the Asian Financial Forum 2013 here in Hong Kong, and he joins us right now. Thanks indeed for this. May I first of all start by asking you really about the Fed's policy on quantitative easing. Do you see this as continuing to 2014, as one understands will be the case?
Well, so we've indicated that we're embarking upon open-ended asset purchases, and we're going to continue to buy. The current pace is about $85 billion per month, and we're going to do this until we see substantial improvement in the labor market. So I guess the big question is, what substantial improvement in the labor market? I have said that, to me, it sounds like we ought to be seeing an addition of 200,000 jobs to payrolls each month for several months. If you think about how long this might take place, I'd be hoping for the addition of about 1 million to 1.5 million jobs over the coming year. If we were able to do that by the end of 2013, I think that would be substantial improvement, and we would not have to go into 2014.
That's certainly one way of looking at it, but the other way of looking at it is that maybe this quantitative easing program will create possibly inflation, hyperinflation. Do you see that as a possibility, certainly?
Oh, no, I don't. And certainly not hyperinflation, nothing like that. After all, we have, that is one of the things that we also mention, which is we'll do this as long as it's in a context of price stability. So that means it has to stay within the boundaries that we've laid out for inflation. We've also embarked upon economic conditionality for how long we're going to keep the funds rate at zero. So we've said we're going to do this until the unemployment rate goes below 6.5%. But we've got an inflation safeguard if inflation got up to 2.5%. 2.5% is not out of line with our 2% long-run threshold. I would say it's just sometimes it's higher, sometimes it's lower, so it's totally consistent. If inflation were to take off, we would stop and reassess all of our programs. I currently don't see that as likely. In fact, sometimes I wonder how it could happen. If you think back on the 70s, which were a time that we all worry about, where we were pursuing more accommodation, trying to get the economy going, and inflation took off double digits, that type of thing. That's a period where wages were growing very strongly. It's a wage price spiral. Wages went up, prices went up to catch up, wages went up to catch up again. In the U.S., the idea that wages are about to take off in a robust, strong fashion, that's not likely, it seems to me, as I talk to business people and I look at the high level of unemployment.
So in essence, what do you see is, not rapid growth in the American economy, but sort of steady growth over the next 2 years? Is that the way you look at it?
At the moment, we've seen modest growth, and we're looking for modest growth in 2013. And I think that's going to be the case, say 2.5%. As long as nothing unfortunate happens in Washington with the fiscal discussions, that could throw a monkey wrench into all of this. If we got that behind us, if we didn't have to worry about the fiscal cliff type issues every 3 months and whatnot, I think businesses are poised to expand production. I think that consumers are ready to replace cars that have been on the road for a very long period of time, and we could get pent up demand fueling stronger growth. I think we could see 3.5% growth in 2014 under the right conditions.
And when we're looking now at sort of the regulatory environment in the United States, presumably you're particularly interested in that because it seems to many observers that what was the sort of liberalizing influence over the last sort of 10 years or something now seems to be giving way for something far different. Do you see the regulatory area in the United States, particularly in Chicago, changing rapidly over the next few years?
Well, I mean, yes. Congress and the President passed the Dodd-Frank Act, and so there's a lot of regulatory reform that we've embarked upon. We have new responsibilities in the Federal Reserve, and in Chicago we've also been tasked with some additional responsibilities. We're supervising thrift holding companies. The Financial Stability Oversight Committee is looking at the entire industry, and they're demanding more capital from systemically important financial institutions and things like that. So the pendulum swings, and we went through a period where underwriting standards were much too lax, financial conditions were overly exuberant, and now we're moving back to a period where we need more and better capital for financial institutions to safeguard against financial downturns, and we'll be dealing with that for a number of years.
Thanks indeed for those answers. Wonder if I could ask you really about the Asian Financial Forum, where you've been the guest here. What's your impression of the forum, having been here, having attended this?
I think it's a remarkable gathering of a number of important policymakers who've come to speak, and financial participants getting together to learn how to work together to find new markets in Asia and get their foot in the door. It's very exciting. I've learned a lot by being here.